All right, let's go. So you can see my screen. So in today's session, what I'm going to talk about is basically the market outlook. I think some of y'all have always been asking me about my market outlook. I've been doing it for many years through a separate session. But now I've kept quiet for a while. So, and a lot of people have been asking me, why not do it? Why not share it? Because it has been useful. So I'm here sharing it again. All right. So investing insights with SK, this is something that I will probably do on a weekly or bi-weekly. You will get informed through my Telegram channel. And so we will keep posting and whenever I kind of have this kind of session in the future. So what are the topics for today? So this will be this week's topic. So I usually like to start with the weekly market outlook. Why? Because it helps me to provide a general outlook and as well as how that relates back to some of the events that has happened throughout the week. And also that will help us to decide like guide us on what kind of stocks to select. Some of you all probably may not believe in this, but this is me from experience. I'm sharing it. Looking into the overall market has always helped me to know where to look for opportunities. I always get started with the weekly market outlook, whether it is SPY, S&P 500, whether it's Dow Jones or Nasdaq. These are the three main index that I look at as well as Russell 2000. But for today, we will look at S&P 500. So because we have short period of time, so I'm going to look at S&P 500. And we will look at Fed rate, cut analysis, and Q&A session. Let's see how Fed rate cut has impacted the market in the last few years. Like in the previous events where the Fed actually cut the rate, what has happened to the market? So you'll find some interesting information over there. So I'll just wait for it. Let's go then for the weekly market outlook. So, weekly market outlook, I always like to share the S&P 500s. So, before we go into the descriptions or the written statements over here, I rather just go ahead and share it from the chart itself. Some of y'all may be very used to looking at this. Some of y'all probably new, but let's make it very simple for today and let's just see it from a very long-term outlook because this is the question that I always get. The market has been going down, been going up. Where do I foresee the market going next? Although predicting next is not the idea, but we can actually position ourselves to be ready for what's going to happen, which has the most highest probability to happen. For an example, right now, if we look at the market, which which has the higher probability to happen, whether it's going to go up or it's going to go down. And my usual way of judging whether which has a higher probability is to look at the chart. So this is a chart that I've been using for many years right now because you can see me going all the way um to up to even 20 years. You can see from here 2008 and all the way been guiding me. And this has been my main reference to know where the market is. And it has been super helpful because if you can see this channel, which I would share with you all in future sessions, what these channels is all about and what is lines. But let's just keep it simple. The red is the ceiling, the blue is the floor. And if you can see over here, we have been moving along this channel super clear. And right now, where are we? We are definitely at the ceiling. So if we were to ask the question, which has a higher probability to happen, go lower or go higher? Which one do you think? Go higher or go lower? I guess the answer is pretty straightforward, right? Yep, exactly, Mel. So that's basically the first step in us looking at the market. Look at the channel, look at where the market is, and we know the market has a higher probability of going lower. So now we know that when we positioned our portfolio or when we want to select stocks to trade, what kind of trade we should be aiming, mostly towards more like a very cautious bullishness or more towards shorting the market. Although I wouldn't encourage shorting for newcomers, but that is basically the right positioning to be in right now. So quickly going into the weekly chart, I really love weekly chart. If some of you all probably know about it, I really love weekly charts. And if you look at this, why I like weekly charts, it's simple because it's gives a more in between the short term and long term outlook, and as well as it gives a more stable outlook. Because if you look at daily chart, it's quite noisy. You can see up and down, like a lot of gap up, gap down, and such. But when you look at weekly, it is more stable. It has reduced the noise, it has suppressed the noise of day to day, and provides us a more cleaner chart to look at. And when we look at this chart, we can also see one very interesting observation. So if you have seen all the previous rallies, right? So if it goes up, it will eventually come back to this 20 weeks moving average. You can see over here, the blue line. So the blue line indicates 20 weeks moving average. And those which are usually where the market will retrace to once it has got heated up, like means basically it's overbought kind of stuff. So we are in the same situation at the moment. We are in a extremely overbought territory. So when I say overbought, that basically means been buying and buying. People have been always been bullish. When in that scenario, when people are extremely bullish, then that's where usually we need some kind of healthy correction. Market just can't be going up forever, right? So we need the market to eventually correct. So if you are looking for opportunities, bullish opportunities, definitely now is not the right time. But again, when I say it's not the right time, you got to be able to differentiate. If you're a trader, no, this is not the right time to be bullish. But if you're an investor who are aiming for a long term, which is multiple years, then that's a whole different story. That's why I started off by saying there is a huge difference between investing and as well as trading, right? So if you're going to be trading more of a short term kind of a guy, got person, so now is definitely not the market to be, not the time to be bullish. You might want to wait for a retracement. And where should you be looking at? That's where the 20 moving average comes back again. I'm pretty convinced, but again, I can be wrong, but I'm pretty convinced based on my experience. We're going to have a retracement, something like this. You can see over here, something like this. We will have a retracement down to the blue line as we start ascending. And that's where, as a trader, you might want to look for a short-term opportunities to be bullish. All right. So now it is not a time to be bullish because we have not touched the 20 moving average for a quite extended period. Something similar to this. You can see all the previous histories as well. If you scroll down the chart over the years, it's pretty much the same story. All right. So with that in mind, so now we know on a market like from a longer term outlook, we are in a very much at the ceiling. So there's a higher probability to drop. And from the weekly as well, it has been an extended period, never touched 20 moving average. It's going to be also in an extreme overbought situation. You can, if you want a very simple look at whether we are overbought, you can just look at MACD and RSI. You can see where it is. But there's a topic for another day. And if you're wondering how much do I use MACD or MACD and RSI, I usually try to keep with just price action and volume. So some of y'all who know me, how the way I trade, I have always used a lot of indicators before in my early days, but eventually I reduce noise, etc., adjust, and I eventually started believing that price action and volume is sufficient for us to trade the market. Okay, so from a short-term perspective, wait for the market to retrace at least to the 20 moving average. Then there will be a good point for us to probably be bullish again. But again, even when you become a bullish, remember we are still at the ceiling. So you want to be bullish cautiously. Don't get over bullish at this market. As always, people say, be greedy when the fear is at the peak, right? And be fearful when the greed is at the peak. So we are here right now, the greed is at the peak. So you want to be fearful. Cool. So that is market outlook, S&P 500. That's basically where we are right now. And as you can also see, why I like to see price action. This is slightly a bit on the advanced side, but I just share with y'all. When I said earlier the momentum is waning or reducing, the reason is because you can see the size of the candles. Is it getting bigger or smaller? What do you all think? Just a very quick look. You don't have to make it too complicated. Keep it simple. When you see a market like this with this kind of candlesticks, where do you see the market? Do you see the candlestick reducing in the size or increasing in size? Anyone? Anyone wants to drop your thoughts? Yes, it's reducing. So basically, that also, when we see a reducing candlestick size, we can relate that to momentum. A smaller candle size equals to reducing momentum, or in another word, you can also say reducing enthusiasm. The enthusiasm to buy, the eagerness to buy is reducing. And that is why the candlesticks are getting smaller and smaller. The body itself is getting smaller and smaller. All right. So that's a quick how you can use price action movements without any indicators to look at whether the momentum is increasing or reducing. And quick ones today, but definitely market is going to open higher. So if you have seen my Telegram post in my Telegram channel, you can easily see I have stated why there's a very high chance for the market to jump today because it's what we call as a triple witching or quadruple witching. There's going to, because this is the end of the quarter. September is the end of the quarter, third quarter. So we're going to have, I mean, for those who knows, it's okay. But if you do not know, don't worry. It's not nothing any extravaganza. It's basically where a lot of options, if you know about options, are expiring. A lot of futures price are also expiring. So what happens is during this time, the market makers, the fund managers, they have to roll their position. So when they want to roll their position, they want to move their existing position to the next quarter, which is December. They got to clear their position. So when they clear, it will temporarily push the market up. And this is only up to today's market close and slightly probably tomorrow's at the opening. After that, it's back to normal. So that's basically what a triple or quadruple witching. We can talk about it more in the future, but do expect the market to open higher today, generally because this is a quadruple witching day, and there's going to be a lot of volatility, especially the tendency has always been to move on higher side. Not because it is because the Fed reduced the rate. And I don't believe in that. If you ask me, I've always told my students before, based on my experience, based of me trading over the years, I've always tried to suppress all this additional news. I've tried to keep to the market and look at the technical analysis, and it's been very helpful to me by approaching it in such a way. Suppress all the news, keep it aside. Just assume you are in a jungle, you're just going to look at this chart, and that's all you're going to trade. And I believe, based on my experience, that will give you a much better result compared to you depending on those external news. Unless you are looking into doing day trading, that is different. Day trading, 2 days trading, you got to be very sensitive to the news, when to avoid, when not to, when to trade, kind of thing. All right, so that is basically the market. And let's move to the next topic for the day. So, based on this market outlook, based on where we are, and how will this reflect where after this Fed, the federal has cut their interest rate. So that is next topic. So also a quick one. Historically, September has been the weakest month, somewhere around August, September. Some people will argue saying it's August or September, but it doesn't matter. Usually between August and September, those have been the weakest month. But definitely that's not the case in this current month. We can still see the market is being at the historical high, and today I believe it's going to open at another historical high. But generally this August and September has been the weakest months. So that's not the case. As I said, not all the time it's repeatable. Not every time it's the same story. This year, that's not the story. But we still have few more days before the end of September. Let's see how that goes. And this is the Fed rate cuts historical market reaction. There's two parts to this. This the interesting part. Usually, because when we read about news, we kind of always get this impression that Fed cut their rates. That means the market is going to go up. Why the market go up? Because loans going to be cheaper, businesses profit is going to increase, the margin is going to increase, so that's why it's going to go up. But there is actually a very much different factor to this. You got to know whether the cut is because of soft landing cuts or it's because of emergency cuts. Right today, it is because of soft landing cuts. If you're not sure what is soft landing, it's basically Fed is saying the economy is weakening a bit, not in any emergency situation, not in a critical situation, but in order to have a soft landing as the economy slows down, not affecting the labor market, not affecting the business. They're trying to adjust the interest rate so that we have a soft landing. So today, the cut that is mainly because of soft landing cuts. Emergency cuts are something like you see during crises, like if you've seen in 2008 or you've seen in 2012. So those are the times they actually reduce the interest rate, right? Those are emergency cuts. And those kind of cuts are actually quite bearish in nature. So if you have realized, the average 12 months return for a soft landing cuts have actually led the market to about 18% gain. And for emergency cut, it's about minus 12.8% decline. So for today, for this current rate cut that we are seeing, it's more towards the soft landing cuts. And since 1980, this 31-point difference, so this is based on the last up from 1980, it is extremely important for us to differentiate between soft landing and emergency cuts. And if you want to know, if you're asking me, hey, SK, soft landing cuts, all right, looks like the market will gain. But does it mean it's just going to go up? That's not what I'm trying to say. That I'm still very much inclined towards a healthy correction in the market, at least in the next 1 to 2 months. After that is when we most probably going to see this kind of 12 months return. And the stock that most probably going to benefit from this is definitely going to be technology stocks. Those are the stocks that will definitely benefit from the interest rate cut, and as well as probably the financial sector as well. But if you realize both these sectors has actually gone up a lot because the market is always moves ahead, right, in anticipation. So that is the reason why I believe the market will correct a bit. There's going to be some healthy correction, at least about 6 to 7% of cut. After that, then we will be able to see the next possible rally. So look out for tech stocks, financial stocks. These are the ones that you may want to look at. So that is the 31 points difference highlights why Fed intention matters more than cuts themselves. All right. So we can have some question and answer sessions. If you do have questions, please drop them in the chat. I will be happy to answer them in the next 5 to 6 minutes that we have. And if you want to know more about this weekly market outlook, because I do consistently share about this kind of stuff, you can join my Telegram channel for those who are not. I will share the Telegram link with you all in the chat right now. So in the chat, you can join us. I will on a daily basis, sometimes on 2 days once, I will share what is my take on the market, some of the guides that we can use to trade the market more effectively, some of the opportunities that I'm looking at. Like I do have like a list of stocks that I'm looking at right now, but mainly more on the options part right now, because buying stocks for a long term right now, the main long term possible, but at least short term to mid term right now is not the correct time, because as I said, the market is clearly overbought. We don't want to be buying at the peak. Am I right? We want to be buying somewhere at the lower end. So now it's not the time. But if you are trading options, whether you're selling options, you're buying options, which is more meant for a short-term trading, then that is a more suitable trading instrument at this current time. And because of that, I do have some opportunities that I'm looking at, which I'll share with you all more in the Telegram channel, and as well as in my future upcoming webinar sessions. All right. Anyone has any questions, please post them. I'm happy to answer those questions. Let me also share the Telegram link with you all. Give me a minute. While I do that, let me hold on a second. I'm coming in. So do post your question if you do have. And yep, so while I wait for the questions, let me just quickly share with you all if you would like to hear more. So this is where Dow Jones is. So you can see it's also overextended at the peak. We never want to buy at the peak, and that's basically why I'm saying now it's not the buyer's market. This is more like a seller's market. Don't get attracted to all this non-stop up move. You're missing the opportunity. It's good to know that market has gone up, it has extended. We got to accept. Now we have missed the boat. No, it's not a good chance, good time to enter the market. So let's accept the fact that we have missed the boat, and also let's tell ourselves patience is the best key to success and wait for a retracement. The same story with, if you want to look at tech, it's pretty much the same. So if you look at NDX, why is it taking time to load? Faster load, come on. This is what happens sometimes with the market. And the X, or even you can look at QQQ. Let's see if that loads faster. Nope, it's still taking time. Nope, sorry, Mel, the recording might not be available. So it's best that you join us. Right now, the recording won't be available. All right. So that's the Telegram link. So just click it. You'll be able to join in. And I will also let you all know when is the next sharing session. This is just taking too long. Don't worry. So pretty much the same story as well for a NASDAQ. So Dow Jones, NASDAQ, as well as Russell 2000, pretty much the same story. And I'm not sure what happened. It's just not loading sometimes because the market is going to open in a minute. So it becomes slower because a lot of them are logging in. The whole platform provider has to take care of all these people who are logging in at the same time. So that is why usually at the time the market opens, it's quite slow. All right. If there are no further questions, so keep a look on my Telegram channel. I will share more notes, more sharings. And if you do have some friends that you want to share it to, feel free to do so as well. They are more than welcome to share in. And we are happy to share more insights about the market. So I will also share more about US. Yes, Susan. I wouldn't be able to say when, but at times when the time permits, I will definitely do some live trading sessions as well. That is definitely on the card. Thanks for the question. And all right, the platform stops loading, and also so let's probably the end for the session for today. And thank you very much for joining. Happy to see some of you all again as well. I think some of you all know me earlier when I've been sharing with you all for the last many, many years. So I'm happy to be back, happy to share more, and happy to talk to you all more as well. Excellent. Welcome back. Thank you very much, and catch up with you all again soon. Bye bye.